Right, let's get this show on the road. Hello, Gene. Hello, Casey. What's up? Hello, hello. Give me a sec. I'm gonna get situated. Sending links and stuff. So, give me just a sec. Hope everybody doing well. Perfect, perfect. Actually, I was wondering if everything is working fine. Right, so in the time being, we can take a look at the chart. In the time being, instead of staring at nothing, let's look at the chart. I'm gonna give me just a sec, ladies and gents. Right, I have the chat situated. Oh, right, I don't have my streamer mode on. Why? I don't know. Or is it? Okay, seems like it is. Right, let's hope everything is gonna be working out fine. All right, well, I think I'm good. Everything is good. Link sent out. All right, let's get started. Hello, Casey. Hello, Gene. Hello, everybody else who made it to the live. Hello to everybody who will join in a couple of minutes. Hello to everybody who will watch it later. I think this live is necessary, especially with the upcoming CPI, PPI. All in all, I'm kind of here to maybe make you a bit happy, maybe disappoint you a little bit, to each their own. I'm not here to play games, you guys know that. I'm simply here to give you the thing as it is. So I would simply start by saying you shouldn't expect too much of the market the current time being, simply because, in my humble opinion, the market will be more or less, although what might feel as if it's a bit volatile, but all in all, in my opinion, it's going to be rather tame in terms of what it is actually going to do. Maybe today we're going to have more of a volatile market, less of a volatile market. Even if we're going to have some knee-jerk reactions tomorrow because we have PPI coming up, purchasing price index, and we purchasing manager price index. Now we have also CPI coming up. We're gonna basically, here it is. Let me just sort of show you this. So we're gonna have the core PPI month over month coming up tomorrow. You can see the previous was a 0.4%. The forecast is a 0.2%, basically a decline. The core does not include food and energy. So if we're looking at underlying PPI month over month, we can see no change right here. This situation does not signal anything good in general. Now let's look at what we are looking for. CPI core CPI month over month expected, the forecast is to increase, to go higher, which is never good for anyone. Although the Fed are constrained with what they can do right now, and the assessment is they are, in my opinion here, is that they're not going to do anything this time around, or they will have to cut. And if they are forced to cut, that implies that I was correct from the get-go, and they should have gone to 625 potentially earlier when they still could have, but at some point we went over the threshold, and there is no solving this problem sort of in the normal ways. We will have to go through abnormal amount of pain to get things stabilized. CPI year over year, this is a complex conversation. I'm not going to speculate here on this live. Those who want to know my personal opinion, of course, are more than welcome to join our Discord community, which now is closing on 17,000 people. It is absolutely insane to say that, but it is. Here it is. Let me show you. It's right now at 16,800 people, just a step away from 17,000. Of course, we have our public server, as you can see, with a lot of traffic, a lot of conversations, all the memes, of course. Memes are the holy grail of any Discord, as you guys know. Of course, we have our private server involved as well. It's all in the same place. It's up to you whether you want to be in the public and the private, both, whichever you like. Academies, non-academies, we'll talk about that maybe later. Right now, it's not important. Let's get to the technicals, because In the Discord, I talk about why I think this number is highly manipulated, and not exactly in the way that you guys sometimes imagine. Arnon and I, shout out to Arnon, one of our moderators in the community. Tim, we talk about these things when we hang out in the voice chat. Everybody's more than invited to hang out with us and talk about these things, ask questions, and so forth. We go deeper into these topics. But here, the purpose of these lives are not to speculate what the market will do based upon what we're seeing. So here we're going to try to rely on technicals, as we said, try to rely on the formation of the market and what we're seeing, and based upon that, we're going to extrapolate what the market potentially is going to do in the upcoming days, maybe week. Because at the end of the day, it doesn't matter what the analysts and the talking heads of the media are telling you. If they are positioning themselves in a certain way, that's far more indicative of their actual expectation and action than what their words are. Remember, they have no fiduciary duty to the average person. The fiduciary duty goes to their clientele, and at the end of the day, if it serves the clients in a way of maybe misleading the overall public or not warning the warning bells when time is needed to do so, it's another action that they're actually doing as a part of their fiduciary duty to their clientele. So take that as it is. Now let's get into this. I want to start, of course, as we usually do, with the smallest time frame, with the 1 minute. There's nothing here to hide. You can see we opened up with a gap today, nothing really surprising. The market immediately with a tiny little gap as a whole in the price action right here. So immediately the market naturally kept on, wanted to close it. That's a natural reaction, more of a knee-jerk reaction of the market because the gap is very small. The market is oftentimes magnetized to close this gap by having full price action moving through, thus closing the gap, getting rid of it, V done, we forgot about it altogether. We don't really care about it. So naturally, the market was moving upwards. That was the natural direction. No surprise, we saw a bit of that continue onwards. All in all, we then had a bit of a cool off. For now, we're not doing anything. So all in all, if you kind of look at it and zoom out a little bit, the angle is tapering down. Instead of us moving on a straight angle in the same way you perceive it as this trend, notice we moved from the top of the channel, we moved to the bottom of the channel. That implies that we're moving kind of in this direction right now. But let's, instead of guessing, let's look at what the larger time frames will tell us, because as we know, the 1 minute is not indicative of anything and can change a million times. But from afar, as we can see, we kind of were on our way. As I told you originally, we're going to spend a lot of time trying to close that gap. In fact, last week I've kind of given a prediction in advance that we're going to spend the entire week closing the gap. Now we're tapering down. We've closed the gap, as you can tell, fully, no problem. But there are other gaps above us, right? Currently, I don't expect the market to actually penetrate into the previous gap. I do think we're kind of going to dwell on the levels that where we are. I don't think the market will be volatile enough to actually take us above these resistances. So for the time being, we're just kind of stuck in a channel, right? But let's verify that. Maybe I'm wrong, maybe I'm right. It's just my sort of a humble speculation. So for the time being, if we're looking at the 5-minute chart, which means we can look and assess for the next 15 minutes, 20 minutes from where we are right now, we're already penetrating into the oversold territory. That means we're going to amplify on that oversold momentum. Although, again, take that with a grain of salt. With the 5 minutes, oftentimes these movements can flatten out, although indicative of a particular direction. That's why these charts are more relevant for scalpers and day traders, mostly scalpers. To be frank with you, we kind of want to avoid these. I just simply skim over these quickly to show you that I'm not hiding anything sort of in these time frames, and there's really nothing really that important to see there. 30 minutes, again, far more dominant over the 5 minutes. In other words, we can extrapolate from this the next hour and a half, maybe 2 hours. All in all, we are still moving downwards, which, by the way, goes into play exactly with what I just said a second ago. Notice how on one hand, this movement through the indicator, as we said, indicates a movement downwards, but in reality, we got a movement upwards. How is that? That's part of that process that we're basically mitigating. And all in all, you will be able to see that this is more of a sideways movement. in essence, this potential movement should have been far more bullish. It would have been mitigated, right? Or could have been bearish, have been mitigated through the bullish momentum. So that's why the smaller time frames not always are fully indicative of, or at least the indicator that we're using is not fully indicative of what the actual price action that you will see. In other words, the angle and the direction that we can see through the movement before we reach the oversold, overbought territories more or less can be tapered down, and when we're going to get the actual selling action, the actual selling momentum, right, the bearish momentum is going to start to come through and we're going to penetrate this area. In other words, we can actually get this almost upwards movement. Let's call this sideways with slight inkling of upside, right? A tiny bit, very similar to what we had here. Again, not indicative of anything. We're still moving within the same range. We are still moving downwards. Once we fully penetrate the oversold territory, it's far more indicative and far more likely that we will actually turn this trend around, and we're probably going to be testing this median line that we have of this channel that is now basically flat. You can see it is a completely flat channel this time, and we're probably going to be testing this median. We already saw the market do that before. That level obviously is currently very important. Here it is. We're not going to be surprised to see that again, especially from what we can see here. I hope I'm not running too fast, guys, boys and girls. I have the chat. Let me check. Buy or wait. Brian, we don't do that here. Buy or wait is up to you. You know, I'm here giving you the analysis. You're a big boy or a big girl, or you know, whoever you are, big alien, dolphin. You decide if to buy or to sell. I'm gonna give you, as an experienced account manager, I've worked in the industry for many years, over a decade. I can tell you that at the end of the day, oftentimes the account manager will not necessarily, even an experienced person who you'll talk to, it depends who you talk to and under what conditions, they might not have necessarily your the best interest for you in mind. So my advice is always rely on your own decisions. Nobody will manage your portfolio better than you will. And more so, I will surprise maybe some of you. I don't advocate for trading with all sorts of Robinhoods or wherever the commission is cheaper. No, I advocate for trading with a bank. So look at it as you want. When an account manager who worked for various institutions for many years tells you that he himself prefers to trade with a bank, okay? Yes, there are commissions. It does cost a little bit, but all in all, the service and the benefits that they give you overweigh the shortcomings, if at all. In fact, I've never had a true instance, maybe once or twice since ever I've been using my bank, that I couldn't sell or buy anything of that sort, which I hear oftentimes happen to people on all sorts of these online brokerages that at the end of the day sell your data to the prime brokerages, and sometimes those who connect with the banks as well. So again, I wouldn't recommend that. At the end of the day, rely only on yourself. Learn as much as you can, all various forms of analysis. Value analysis, if it's again all sorts of proper DCF processes, if it's technical analysis, and combine all of that into a single equation, make your decisions, and of course up to you what to do. I'm simply here to show you the technicals. All right, it's really important. I know it sounds like a really long tangent and rant, but it really is important for you guys and girls to understand these things. So on the 45 minutes, no big surprise, we're seeing basically an amplified version of the 30 minutes. We're seeing that we're going to be continuing on this downtrend, and as I said, once we're going to sort of move a little bit outwards, it's going to become a little bit more evident how this trend wasn't really an uptrend, but more of a sideways with slight inkling upwards. Nothing all that crazy, and I have told you that we're basically expected to have this directional upwards trend, which all in all, when the market moves up, we have corrections, what some would perceive as upwards, because you perceive it as this is low, this is high. In your mind, you perceive it as an uptrend. In reality, it's more or less a side movement, or moving sideways within a range, then break down lower. And then basically what the market is doing to the average trader is basically continuing to, you're always fighting a lost battle. You're always a step behind. Notice what's going on. So once we reach the end of the channel, you guys get sold out, right? In fact, very low so. Very low so. Then you're very busy the following week just recovering, right? So they're basically handing over the bags slowly, meticulously, almost like a Swiss clock, and you guys are picking them up like a Swiss clock. I mean, not you guys in particular, but generally the sort of the retail trader. Why? Because the retail trader have been conditioned in the last 6 to 7 months. Every correction has a correction upwards. And basically, you've been conditioned to buy up because you think the market always goes up. And look, the long-term traders should not be selling out. More so, people oftentimes perceive this profession as a yes or a no thing, a black or a white thing, very binary answer. No, you can actually liquidate part of your positions. You don't have to liquidate all. You should be maybe more busy with working and generating more dry powder. So when we actually hit the bottom, and you guys probably know, whenever we actually hit the bottom, suddenly, a lot of the public starts, sort of saying how sad it is that I don't have dry powder to buy right now, right? Whenever they were buying on the way down, basically catching falling knives. And then we spend quite a long time at the bottom, and then nobody argues, everybody agrees in unison that we are on the bottom, right? And we spend there a nice chunk of time, especially enough for the average person to basically DCA into. So I would say no rush, but we cannot ignore the reality of what we're seeing. More so, what you need to realize when these sort of circumstances happen, when we do these movements sideways, we open up, our bottom continues to go lower, right? And we already tested some of these lows, so it's not going to be that surprising to see the market dip even lower on the next drop, right? Again, and we know that as Tom likes to say, we go up on the stairs and we drop by the elevator. As I like to say, we gain in droplets, but we lose in buckets, right? And that's kind of that formation, how we gain in droplets slowly and then we lose in buckets very rapidly. It's all due to the movement within the trend. More so, we have these gaps to close. We basically have chores we haven't completed yet, and I absolutely forecast how we're gonna do these things in the near future, very near future. In fact, I believe this week is gonna be this turnaround from being bullish to more bearish. No one says it's gonna happen right away. No one says it's gonna happen tomorrow. It might happen on CPI, not PPI. It might take the day afterwards for the market to digest what we will get in CPI, PPI, depending, of course, what the numbers will be. In fact, I might as well pan out to be completely wrong. The market will rally upwards, close these gaps, and then we'll have to reassess. My current projection is that the market will be dipping downwards based upon what we will see. And there is a bit of a caveat, there is a bit of a monkey wrench right here in the daily. You will see that in a second. But all in all, if we are objective, we're kind of starting to see a singular theme here of, yes, we had some bullish momentum. Yes, it's being squeezed out, or basically squeezing this lemon. And once we do, we're going to start dropping downwards. Let me just clean that stuff up so it will be clear to work with. All right, perfect. So let's continue. So 45 minutes, again, more movement downwards. Nothing that we didn't see on the 1 hour. We already started to see what I told you last week. Remember, I spoke how we have this formation and it's very temporary. And we don't know, this might be another temporary, right? But we will see that things maybe show differently, right? So for the time being, we're starting to see how the 1 hourly already also starting to see a sort of a dip, projecting that we will start seeing a bearish movement very, very soon. This process, and I've kind of implied, it doesn't always come through as an immediate breakdown of the market. No, those are basically, these two forces are being applied to the market simultaneously, and what we are seeing in the price action is the outcome of both. Very helpful, Thomas. I hope so. I really hope this helps. It's all actually very basic. In the community, we discuss far deeper concepts and deeper tools, especially with my students. I have a one-on-one academy that I explain how I personally do technical analysis to come up with all these conclusions. What you're seeing is the more simplified, more basic version, but it is good enough to convey the idea to you as the retail trader, to understand what it is that the experts are looking at in a simplified form. Okay, again, you make your own decisions and extrapolate what it means to you, but I'm here just to show you what the technicals are showing. Again, those are almost facts. It's a first principle analysis approach, if you will. We're just seeing we're we're approaching the whole thing from simply what we see. We cannot argue. It's the same thing as arguing with me that tomorrow there will not be a sunrise in the morning. Whether you're going to be asleep or in a blocked off room, it doesn't mean it's not going to happen. It will. All right. So at the end of the day, what we are starting to see on this 1 hour chart is that turnaround and potentially a little bit more pain in the upcoming sessions, right? Remember, because the 1 hour does not really allow us to predict all in all that far. And what it does allow us to predict is basically this turning around process. And this turning around process can actually pan out, remember, in the following way. And I'm not even kidding. The market can actually do that. Yes, this is not abnormal. It very much depends on what we're going to be seeing on the PPI, CPI reports and the market's reaction out of it, right? Now, let's again continue. 4 hour chart. This is what I've told you what we should be expecting, this process of how we're going to be reaching these highs. Basically, we're going to be moving slowly. Remember, we spoke about these processes when we were midway, in essence. Now we already are in overbought territory, which means the engine is too hot, we're overheating, and from afar, we're actually starting to see that pattern that I spoke about. And remember, I actually said once we broke through this channel that we're probably going to be seeing a retest, which we saw throughout the week, which is very normal. But all in all, again, we are coming to a head with this bullish momentum. Probably we're going to be seeing a turnaround, this flip around, something that we saw here coming through to the smaller time frame. Is going to be this smaller process locked in just to this shorter temporary area. And once we do, if we will see a correction downwards, of course that means that we will experience a downwards movement in the market. It will be rather significant, easily reaching, closing that gap that is roughly around let's call it 5,125 if we really want to be anal and precise about this, to about 5,062. Let's call it 5,050-ish area, all in all, because the momentum will probably drag us slower. Being a round number, a 50-50, I'm not going to be surprised if the market will attract to that. Yes, there is a psychological fun number there. So let's continue the day chart. What does the day chart tell us? Let's remove all that junk, just so we can see clearly. You see, as I said, this process of the turnaround is not going to be all that straightforward. Why did I expect that? This is that monkey wrench that I was talking about, that we still have more momentum to the upside. That momentum, of course, will be amplified once we reach the top, once we reach above that 80 area, which potentially actually shows from what we see here, this lack of, well, this hole for the time being, right? Which we are starting to see a bit of a turnaround. Potentially, we're going to see maybe some halting here, right? Something akin to this. But we're going to see on the larger time frames, which is more important and implies a far larger scope of a movement. But we are able to see something very interesting. In fact, two things. The same way we notice, we're able to see very distinctly when the market is on an uptrend that yes, we have a long trend up, right? Starting all the way from here, and then a small correction downwards. Now, how do we know we're on a downtrend? We're having long movement upwards, small movement up. Long movement downwards, small movement up. So you see how this flips around in essence? And yes, the same processes of retests, supports, resistances normally happens on the other side as well. It's just that oftentimes people are blinded by their own biases. We convince ourselves that this is not what's going on and everything is fine and don't worry, there will be a correction. Well, that is actually something that the market makers, the talking heads in the media are experts at. And the other thing that we can see is almost that very indicative loss of momentum, how you can see the candlesticks and the trend. Notice how the first candlestick, I know it's very confusing because most people focus on the body of the candlestick. I want you to notice how large the entire candlestick was, all in all, when we combine the wicks, right? These tails that we have on every candlestick, they imply how far the price action went. So if you notice this candlestick, all in all, its range was quite serious. It was quite extensive, more so. Notice this one as well. Notice this one as well. Quite big, long candlesticks, roughly about the same sort of amount of movement, right? Change in price. Notice how this candlestick is now smaller, right? How we're losing momentum in essence. Notice how this one is even smaller. This one is just even tiny compared to those. We're slowly losing momentum, right? We're basically are able to do less in the time frame that is given to us and resulting with smaller change in price, okay? That actually implies that turnaround process. More so, I will tell you that this is very textbook. Very rare that you will see this very clear, concise, clear-cut sort of loss of momentum. Very often it's going to be all over the place. It's going to be very confusing because it has its own impulses internally. Remember, the market is far more complex than I present it to you. I just present things in the most simplified way. So you guys will actually have something, right, extrapolated out of this whole live that you will be able potentially to use to your decision-making processes, okay? Now, as we said, if the larger we go, the more important it is, the more indicative it is of what we're actually seeing. And remember, if you go to my previous last week's videos, to all the lives, I was saying and indicating and implying that we potentially will see some closures well, first of all, the closure of the previous gap, the one that was sort of lingering on, as we've done that, and we will see ourselves getting really close to the previous one, but potentially not closing it. This actually implies that we might close this gap. Pardon me. This might actually imply that we will close that gap, right? The one that we have above our heads. Let's be more precise about it. These levels, the 53 and 5383, and because we have several forces altogether, let's say that is a 54 and 10, right? And give or take. Looking at this, we potentially can close this gap. The thing is, even if we will close that gap, moving upwards, we'll basically be squeezing completely, running the engine so hot, so to speak, so overheated, to the point where the market will then have to correct to cool down for a longer period. That is actually something very normal. And the other thing, as I said, this is only a monkey wrench, because all in all, if you're attentive to what's going on, and here you can see the similar pattern that I've just explained, but more of a larger form, a trend downwards, which is large, a small trend upwards. And even if we're going to prolong it a tiny bit more so, it is still remains being a correction relative to the move down. In other words, a trend downwards, right? Very indicative. More so, we might get a lot of very bearish momentum. What would feel to you guys is out of nowhere. It's not out of nowhere. The weekly chart is actually very strong. A lot of people, a lot of technical analysts, a lot of bots use this chart as their base point, if you will, simply because it is indicative of just that amount, indicative of this proper amount of time that allows them to have decent swing trades. And oftentimes people don't realize, a lot of funds, a lot of traders actually like to reposition, rebalance. A lot of funds get rebalanced sometimes on a daily basis, depending on the fund. Some funds are rebalanced on the weekly basis. It does vary, of course. You do have the Cathie Woods of the world that report to you all the time how they rebalance, and those who are attentive can actually identify that even Cathie, even ARK Invest themselves basically trade. They use a very smart repositioning system. Most people work with very few positions. They work with a lot of positions, allows them a lot of flexibility. And at times you guys won't realize that something that they're selling, they're actually profiting, right? Because it's actually an old position that was bought at a lower price, and now they're basically executing for some other rebalancing needs. So all in all, what we're starting to see on the weekly is actually a lot more painful. And as I've said, as we were building this trend downwards, I was saying, look guys, nothing is linear. We're gonna break down this the bottom of the channel, right? Retest some of these levels up and down, until we're then going to have another move, which you guys will be conditioned to think that that is it, right? It's going to be very similar to before. We're going to rely on certain supports. But here is the problem. The problem is that if you're looking at the monthly, which implies to us that at least those who can read the market out just a couple of candlesticks out from what we're seeing here, just a couple, you don't need more, 2, 3, doesn't matter, you're already looking potentially between 2 to 3 months. Now ask yourselves, how much more damage can we do in a couple of months than we can do in a couple of days? Okay, again, remember, if the monthly is basically indicative of bearish momentum, that means we'll be spending a lot longer being bearish. And if our bullish momentum is on the daily, we're going to be spending, well, a couple of days, but all in all, it will be engulfed. It will be a tiny partition out of this entire candlestick. We have, of course, 18 more days to close this candlestick. I argue that this candlestick will look very differently post PPI and CPI. But of course we'll have to wait for that, and this is why the argument, going back to the beginning of the video, is that I think the market will be rather tame for the 2 upcoming days until we actually get the numbers out, digest them, or maybe the market makers already have a plan in place and we are starting to smell the hints of how they're positioning themselves and getting ready, because maybe they know something that you guys don't, or maybe they are assessing something that you guys don't yet tended to. Now let's look at the chat for a second. Guys, I hope I'm not running too fast. I'm trying to get it all into the video. I know the videos tend to be a little bit long, but it's really important that people will understand the context of things that I'm working with and trying to show you, to convey these ideas, right? Javik, hello, good to see you. Yeah, I saw you were saying you jump in. I'm glad to see you here, man. Are the daily and weekly charts looking bullish, but the month? Well, first of all, the weekly, I mean, you be the judge yourself. They're not really bullish. They already are having this turnaround process. But on the weekly, it's not going to be like, you know, the turn radius is going to be very small on the smaller time frames, right? It's almost like a bicycle. It can almost, you know, turn on its own axis, if you will. But the larger we go, the larger the vehicle becomes. So, you know, at the weekly, we're already looking at I don't know, a van, if you will, right? It's not going to have the same turning radius, and it's going to be very slow. So you want to try and identify the beginning of the process, not to overstay your welcome if you are trading and relying on these charts. So in essence, yeah, we might still see some more bullish, you know, running on fumes sort of situation. And once we run out, the larger time frames will show their true face, so what they're actually doing, which we're looking at the weekly, already penetrating into the oversold territory and being amplified. I argue that this candlestick is not going to look like that by the end of the week. We still have 4 more days, which, as I said, include the reports. The reports will affect the market quite severely. I think, of course, things can change, right, depending on the numbers we get on the reports. But and I do recommend to those who are new here or not a part of our Discord, doesn't matter whether it's the public, the private part, it doesn't matter. We discuss these topics in depth. Whether if I'm busy or the admins are busy, you'll always have our other members can tell you what we think and our ideas. You can always scroll up and see everything we said before. We said this a million times probably. So you can get an idea of what our perception of what is actually sort of going on. And we don't think that the financial conditions that are being presented to you or us in reality are fully correct. I would simply say, look at your at the receipt when you go to the grocery store. I say don't ignore shrinkflation. Don't ignore the fact that the fact of the matter that all the products are basically shrinking, and we're paying significantly more so for every single thing. And well, the reports are implying that these same goods will actually go even higher. I think I agree. Just to sort of throw that in, I do think we have been in a recession for a while, and it was hidden very meticulously from us. And I do think very soon it's going to become evident to the point where it's just going to be just inarguable. And the outcome is a couple of years of pain. Yeah, there is no other way. And in fact, I don't know how well this generation will deal with it. It's something we speak about, as I said, in the community in depth. Um, hey, happy Monday. Hey, Joker. Whoa, good to see you, man. Stebo. Hello from Italy, basically. Hey, Greg, bro. Hello, hello. Ayun. Hello, hello. Mike. Hello. Buy if you plan on holding onto it. In essence, yes, that's kind of the idea. If you're planning to stay long term, the correction, that drawdown that we're gonna have shouldn't deter you, right? But also knowing when the right time to buy. Look, I'm going to make the argument that technical analysis is important to everybody. I said this before. It doesn't matter whether you drive once a year, right? Whether you just need to execute or buy in and decide when is a good time to start DCAing. These ideas, okay, the understanding of when is a good time to do something, is actually technical analysis, because technical analysis convey oftentimes what is not being conveyed to you on the television by the talking heads, nor do they really are interested in you guys knowing. I mean, imagine if they're interested, some of the institutions are interested in unloading, they cannot be telling you that everything is going to be fine, simply because then you will not be buying. Remember, the market at the end of the day is a zero-sum game. It doesn't matter that your 1,000 ROI came from 5 different people, but someone needs to lose money in order for you to gain money. And if everybody are selling together, basically rushing towards the door, nobody will be buying, so you are just as stuck as anybody else. So no, they will not, it's not in their best interest to actually tell you that everything is bad and you will stop buying. That's that counterintuitive thing that they just spent months over, and a stupid amount of money on conditioning you guys into. It is literally going to be counterproductive. So now they actually have to play the game of don't worry, everything's going to be fine. That's my own perception, right? Even the institutions I've worked for do not represent the talking heads. At the end of the day, you guys need to understand, these are guys that are on a far higher level, and the connections and whatnot. I'm not going to even go in depth into that, but as you can imagine, well, nothing really is a coincidence. That's at the end of the day. Okay, let's continue, because we still have a couple of time frames to run through before we end the stream. So all in all, the 3 months, and this is the only like real big monkey wrench that I spoke about, but I've said this before. Those who are more attentive, they understand that the 3 months is such a large time frame that it's not going to give you the same outlook. You can see some of these impulses do not necessarily look the same way they would look like, pardon my horrible drawing skills, but you get the idea. Basically, some of these impulses represent a larger cycle, if you will, and it is a cycle. As long as you're not aware of it, is basically becomes invisible to you. And the average trader, this is where these indicators very much fail most people, because you guys don't understand. And I said this before, it's not as simple as up, down, up, down, up, down, up, down. It's not as simple as that, especially when you go to the larger time frames. Those who are kind of more hawk-eyed would notice that there is more of a overarching cycle here, and this is how it comes through this indicator. It doesn't mean that we cannot run a little bit higher here, but it is starting to indicate something into this according to this sort of channel or direction, and we saw it on the smaller time frames. It's not as much of a monkey wrench in our wheels as much as you guys would think so. In fact, it is actually a confirmation to what I'm saying. It's just that the untrained eye will not recognize it as such. This is very important to note. Okay, now let's continue, because at the end of the day, we want to try and see. Same thing, as I've said, we're going to see something very similar here. Remember, these processes are not linear, right? Very similarly, so assessing here basically what we just saw on the quarterly chart, here on the half-year chart, is very similar, but on a smaller scale. We're going to be turning around, moving down. That's my assessment, because this is not very indicative. It's very hard to read. Now, why do I say that? for a very simple reason. This, ladies and gents, you need to understand that what we've seen so far is that this candlestick, hypothetically, should have been even far larger. We should have made it all the way to that 6400, 68 right here, the completely extended level, just go bananas, if you will. But the process that we saw here is the mitigation effect of that downtrend. Now, we've just started. This is almost like a tug of war. And we can already see that this avalanche is inevitably taking us downwards. And this is the larger time frame I can actually show you. And these processes are far more linear. There are a lot of more forces that are involved to why the market behaves in the particular way that it does. A lot more forces. It's not even something that I'm going to try to explain right here. Again, join the community, join our Discord. The links are down in the description. Of course, if you want to, you can become a Patreon. That way you'll be able to participate in the weekly Zoom calls that we do. Of course, although right now we're on a tiny break, but at the beginning of September, we're probably going to go back to normal schedule, although we had one call just the other week. And of course, there's the partition of my own academy. You're more than welcome to just, talk to me individually. I'll explain how it all works, have a one-on-one call with you. Make sure to reach out to me only when you're certain that you have the time for that call. And yeah, that's kind of where we explain these more sophisticated ideas of how it's not all that simple. There are far more complex tools. But all in all, you can see that we really haven't really started yet feeling the pain, right? So what we've been experiencing so far, and those who are more aware and understand what it is that we're looking at, we're actually looking at the price action being completely overstretched over the channels that we've already been moving in for basically years. And again, I'm not going to try and explain that to you. It's something you'll have to turn on logarithmic, basically unadjusted chart, to be able to see for how long we've been actually spending time in these same processes. All in all, you can see it's almost this linear prolonged process. Again, something I wouldn't want to spend my time on right here, right now, because it's going to take forever. But you need to understand the market is a mechanism that is not just here for the cycle that you decided that now it's time for you to trade and make some money from the market. The cycle is far more prolonged, okay? And the forces that are affecting the market are almost in comparison to how long most of us have been in the market, including myself, including Tom, including some of the best analysts you're looking and listening to, are basically ancient in comparison, if you will. And these forces are far stronger than all of us put all together, okay? I want you to understand that what I'm showing you here is very basic. It's just kind of try to explain to you these very complex ideas through in basic form. It doesn't mean that there is no underlying method to the madness that is far more complex and can actually reveal a lot more about the market. That is about that. I saw a question about NVIDIA. I'm not going to answer that even, jokingly. I'm not going to tell you whether to buy or sell NVIDIA. NVIDIA does not live or exist in a vacuum, as you can imagine. I've been saying NVIDIA will go for a correction for quite a while. In fact, I was predicting it before we went into the split. I have had made some mistakes, if you want to call them as such, made myself regarding NVIDIA. NVIDIA is an outlier. It had outperformed significantly so the following and previous year. I was expecting originally a significant rally on NVIDIA, but this even surprised me. But I will tell you something that people who, money managers, account managers, people who work in the industry for a long time, have this quote in a way, and it doesn't often apply perfectly, but the idea does apply. When your ROI is 100%, again, talking about a company, you're going to pay for it somewhere around the corner. Meaning, in other words, it's always almost impossible that companies will be actually growing at a particular rate without having to do some sacrifices, especially at hard times. And oftentimes these sacrifices are revealed around the corner. And when they are revealed, when everything comes into the light, people will start, hesitation starts to seep in, and inevitably people start worrying for the already existing profits and start to execute. As everyone will tell themselves, of course, it's just a little bit off the top, but imagine millions of people do a little bit off the top in the market altogether. It will look bad. It will not look a little bit off the top. It will look like a lot from all over. Right? So take that with a grain of salt. We're all adults and responsible for our own portfolios, but I'm expecting to NVIDIA not to be an outlier. Of course, it will benefit from the entire AI hype, but it doesn't mean that it's bulletproof. It just means that it will survive this ordeal far more alive than the rest of the assets. Yes, that's undoubtable. But will it come out unscathed? No, that's not the case. I do think NVIDIA is in for a big correction. That is also a big part of how the indices will play out. And those who can look back actually were saying that we're going to have probably here what would look like a far larger form of a head and shoulders, which we're already starting to see. These lows can be quite low. They don't have to be identical, by the way. They can be completely offset. We might have our shoulder completely right here. It might as well be a weird Dali picture, right? A painting. The shoulders it doesn't have to be symmetrical. The market is not picture perfect. In fact, it rarely is. So don't look for picture perfect. Never in the market, to be frank with you. Okay, that is it, ladies and gents. If you have any more questions, I'll be more than happy to answer any of them while I still can, because I will be dropping off rather soon. Yeah. Yes, of course, I can draw a house on that. Let me just do this. Here we have a house. We have this nice little window. Here's a roof. We're gonna have this, right? So this is our technical formation, and don't forget the doorknob and the little person. Okay, here. Okay, technical analysis complete. Illuminati confirmed. My pleasure. What about Tesla volume? You guys are trying to drive me nuts with that Tesla thing. What, Mike? What? No, Mike, it's good. It's good. Let the dude have some fun. Come on. We have to even. I mean, look, I would assess that, in fact, I might actually check it out if we really want to see, let's see. Place not well. Yeah, I'm not gonna get what I want, but I was trying to find where I have my trading list. I can give you the exact volume for this bare second. It doesn't matter really much, as I said. Tesla, sadly, the volume. I'm even the liquidity. So I'm assuming if you're gonna look at the volume right now, you're gonna start seeing that the volume is slowly decreasing, simply because, look. Even though the Tesla itself is an asset that is almost controlled by this cult-like following and this blind buying at times, the institutions or the smarter investors, traders, doesn't matter how you want to classify them, the whole jargon is being completely misused. At the end of the day, you will see far more selling, basically, so the liquidity is dropping off very, very slowly. It's not going to be evident. It's almost like that idea of a crab being boiled, and that's the same idea that I told you before. If you're going to look at Tesla, you're going to realize that all in all, we've been retaining this longer trend, and if you're going to realize the liquidity was dropping all along, was dropping off all in all, even though you had these swing trades, of course, you need to know what to look at. But you would have been able to realize that, yes, slowly but surely, Tesla itself is also being sold off. And don't mind me, when I say that the institutions, of course, when they see an opportunity that And especially with a cult following such as Tesla, that for every dip you guys think, well, again, you guys, not to offend anybody, it's not a personal, approach here. It's plurally speaking kind of thing. Oftentimes the retail trader, especially those who follow Tesla, are very loyal. It's a good trait, actually. It just goes to show how the retail trader, those especially who are involved with Tesla, are very loyal to the asset. And over a longer period of time, those who are able not to rip that lottery ticket apart, right? Because at the end of the day, it is a winning lottery ticket, if you will. And right now it's in its diapers and its market cap is just nothing. And compared to what it's going to be when robotics will be in full play. And of course, here we kind of are deviating to some speculations, and the energy storage partition, the solar part as well. I do think eventually it will be good, because the idea of implementing the solar panels into the house itself is brilliant. I mean, we should be taking advantage of every surface we have. I think it's free energy. Why the hell we're not doing it yet everywhere and all over the place? And of course, there will be hurdles. Of course, it will not be straightforward. Of course, it will not be easy. Do you find MACD a useful indicator? If you're a beginner, yes. Yes, of course. Look, as long as you're using the indicators correctly, yes, most tools are good. It just, they are very limited, and more so they're limited because of other factors. It's most people are unfamiliar with basic principles of the market and other factors that play into it all, and so these indicators become almost redundant. They almost work with no context. Anything with no context is useless. You guys are able to extrapolate some stuff using them, and they're not bad, but they're having a hammer, if you don't know how to use it, is pointless. Okay, or having a hammer with no nails, you can you yourself can understand. There's that. I was having a long rant, and now I forgot what was I saying, but it was probably smart. Got it. Thanks. All right. No, my pleasure. My pleasure. But in general, I do think I've kind of got to say what I wanted. Ladies and gents, I'm not here to give you financial advice. At the end of the day, all of you should, be the adults and responsible. Imagine, you know what? If I can give you an advice, imagine your portfolio is not yours. Imagine your portfolio belongs to your kid. Okay, your kid walks up to you and says, "Daddy, mommy, I need some help." Right? I have this portfolio. These are the positions. This is where the market is headed. What would you advise me to do? Right? You probably wouldn't want to harm your kids, right? You probably want to be doing what's best for them. So, in that same essence, treat that portfolio as if it's a portfolio of a loved one. That way, you will be able to still want what's best for it, and yet stay objective enough to be able to guide and maybe give yourself advice. That's probably the best way I can approach it. Think about it. I mean, you wouldn't want to advise anything bad to your kids, and when you wouldn't know something, you would say, "You know what, I don't know, go ask an analyst, an advisor, a specialist." Do that yourself. That's probably the best approach. Do the same thing you would advise your kids to do themselves. Fun stuff we can do while we're already here. Why is that off? Wait, where did I have my thing? Where is that it? Am I getting the wrong thing? Yeah, I was looking at the wrong charts today altogether. The other charts. Doesn't matter. We have this, by the way, which is fun. Those who haven't seen this is a chart that overlays S&P, Palantir, IWM, the Russell, Tesla. And you can see how they're all moving in singular form, even though every single one of them have their own volume and their own effects, their own individual parameters that affect them. But all in all, you can see that they are moving in a singular formation. You can see they're all moving in tandem. So when you guys ask when one thing is going to do whatever, you need to understand that the vast majority of the market right now is doing pretty much the same thing, but in its own relative prices. And of course, the damage is mitigated by how low the price is, because the changes come through in percent, not in direct form. Not see gap up being filled on the daily. simply because of the momentum. The momentum does not show, from my experience, that there's enough of it, and because the other time frames are indicative of a negative move. So when you have an outlier, you can almost, well, not almost, you really need to have to do this combination of things. You say, well, even if I have, it's almost like, look, I have, when you go through the time frames, you can almost go through this process of saying, well, I have 10 points of bullish momentum from what I can see, 10 points upwards, right? But if, from what you can see, you can accumulatively find, I don't know, 100 and more so points downwards, you have to go with what is more dominant, right? Again, it's actually is a very good correction, a good question, sorry, about how the corrections work. Remember, you more than some of the people here actually should know. Gene, guys, is a student of mine, and we spoke about with him in depth. Great person, very smart person, very good questions, and he actually asking a question that is very relevant to all of you, because you need to be able to recognize and not to get hyper focused on the day-to-day movements. You need to be able to see the overall trend, as we keep on calling it, the overall narrative of the market. Because if you are moving in a particular direction, let's say somebody moves northwards 10 kilometers, then move southwards 2 kilometers, and then again northwards 8, and then south 2, but maintains this this consistency of moving more north. At the end of the day, if I would ask you what the direction of this person is, of course you'll be able and forced to say that it's north, right? The same applies to the market. If our movements on larger time frames are more consistent to the upside, that means we're moving upside. If they're more consistent to the downside, we're moving to the downside. It's pretty simple. And when we're going to be having these processes of changing the trend's direction, they're going to be visible. They're going to be almost like these slow down in processes to almost a halt, right? Then we recognize these bottoms, these tops, and so forth. I believe we mentioned might flip if CPI, PPI, correct. Cause some sort, correct. So then we actually might see if CPI and PPI will come in somehow positive and still will be digested in a positive fashion. We still might see the market actually rally a little bit. That's a very good point to point out right there. And we might see that gap, or conveniently here actually mark them all up. We might see this gap getting closed, okay, the gap above us, or at least partially so. So far, you can see what the price action has done. We basically hit our head on that resistance level, fell into that new channel. So far we're moving in it, but it doesn't mean that all in all, even with that short-term time frame, we might be needing to close that movement, right? Remember, we still have some more bullish momentum, so potentially we might see retest these levels, might even see the gap, but all in all, it's going to break, right? That's the all in all. I hope that helped you, Gene. You and I, of course, going to be talking about extensively in our next session. Currently seeing which would be correct. Well, not a reevaluation. No, not a reevaluation, Gene, not at all. It's just going to be a temporary part of the temporary movement upwards. It doesn't mean that the overall trend will change. Remember, this will not. It's the same thing as trying to drown a tsunami with a bucket of water. It is pointless. So no, I mean, you're simply going to be able to, be a bad analogy to that, but mitigate what is happening. In other words, it's not going to be as severe immediately until you run out of the bullish momentum, and that's it. Good question. Very good question. Very good that you pointed this out. Correct. We might still see some more bullish momentum come through once the reports are in. But all in all, if you ask my opinion, again, because we're looking at the overarching, because think about it, the effects of these reports can take several days, right? A week, or 2 weeks at worst. But we are seeing that on the monthly charts and further on that we are going to be seeing a lot of downside action, and until then we're going to have several reports coming through, so it's far more indicative. Yes, I'm of course, no, I've been very vocal about how I see this. The question is how you guys see this. It's up to you. At the end of the day, I'm just seeing and sharing my meandering thoughts. It's up to you guys to analyze how you perceive this. I had earlier, what question, Javik? I'm sorry, I might have missed it. Let me check. Prediction you had to top Zoom that SPX would have around 5% by end of August. When we're talking about time frames, it can vary. I often don't like to predict how soon something will happen. And the weekly stock. Yeah, look, I do give some predictions based upon my experience and knowledge, because I've been doing this for a very long time, and oftentimes I can give a rough assessment. But when something sort of happens, when these deviations, right, happen, all they can do is they can prolong the process oftentimes. So if I say something and then you see, or we have an event that almost made us, we still keep on track, right, but we're no longer moving at the same rate we were moving earlier, and maybe we now have some elements that force us in the other direction, and thus create a choppy market, right? Sort of this choppy period. But all in all, once we run out, it's almost like a temporary resistance against us. It's temporary liquidity. Once it runs out, we dominate, and in this instance, I mean we, because we're positioned on SQQQ, which, by the way, those who don't know, I'm actually planning to buy more. I'm currently holding 1,500 of them. I'm actually waiting live for some funds to come through so I can buy in bulk. I'm planning to have around move up towards 2,000 shares. Yeah, that is it. So I'm still positioned on SQQQ. In fact, those of you who are, oh, how hard it is that SQQQ is down. No, I'm happy for it. I wish it's gonna keep that up for at least a couple more days, or a day, whenever my funds are in, so I can buy at a low price. The things that I see currently are almost inevitable in the overarching time frames. So my position here is to be loading up on SQQQ. Does that mean I'm a bearish? No, those who know better, I'm simply convinced. I'm playing what the market gives me. I'm not a bear nor a bull. I'm just an analyst who does what the market gives him. It's very simple, and I advise you guys to kind of follow the same principle, and of course apply it to your own strategies. But no one says you have to be selling and buying every other day. There are strategies to these things and so forth. All right, ladies and gents, I will be jumping off. I think I have no idea how long this was so far. I hope it was fun for you as it was for me. I really enjoyed doing this. I really enjoyed talking to you, showing you the stuff that I see myself. Quick shout out, by the way, like, subscribe, all that wonderful stuff. What's going on? Nice house. Drawing skill. All right, I appreciate you appreciate my house drawing skills. So that's great. So here is our public partition. Our public and our private servers are basically all in the same place. There is no need to be jumping to different places. Shout out to Tim, a legend to his own right, a close friend. Tom, the brother from another mother, to whom you all have to give a big thanks, because this entire channel, me doing this, is thanks to him, because if not him, I wouldn't be not doing this. He convinced me that people are interested in blah, 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 blah. And so I'm here, and gave me a ton of advice and help. And in fact, the microphone I'm talking to you guys through is a gift from Tom. So, I mean, there we go. Another bunch of other things I use to do these streams. And of course, yeah, back to our community. Those who want to ask me about my academy, DM me, direct message me, and I will be able to give you more information. I currently have one less spot for the public members, and once it's taken, of course, it will be locked off. I will be taking a bit of a vacation towards the end of August and the beginning of September, so I'm not sure how about signing up during this period will look like, so don't miss out. I have 2 more spots for our Patreon members and YouTube members, so all of you guys still have spots. Don't miss out, because they will be locked off soon. And also the Patreon is up to 1,000 members, and once that Patreon gets to 1,000 members, I'm gonna lock it off, and these people will be locked in for life for only $10 a month to participate in all the Discord activities and all that wonderful stuff. Remember, Patreon is not really the headquarters; it's merely a gateway, if you will, through which you sign up, you get your roles, and mostly you go to the Patreon, to the Discord, and then you actually use the activities that the Patreon members get. That's it, ladies and gents. I love you much. Thank you so much from every fiber of my soul for joining this. I really, really, really enjoy doing this with you guys. I really enjoy the community, the conversation. For me, it's a great replacement for being at the trading desk. I really enjoy you guys showing interest in the market, wanting to learn. It's our Discord, I think, is one of the best resources around. And those who are here on this live right now still and don't know about it and don't use it, you guys are missing out immensely. I can't even explain. That's it. Like, subscribe, ring the bell, do all the wonderful stuff. Love you much. Have a wonderful rest of the week. Make money. Have a green ROI. Love you much. Bye bye.